Hello and welcome to the ML Dropout. Today we're working with QuantConnect. QuantConnect is a platform that is Python based where aspiring quant developers, data scientists, and traders alike can come in here, write their own Python algorithms, and then backtest them against the currency markets, so like Forex, against the stock market, and even against crypto. They have a wide variety of data. It goes back to, I want to say, like at least 20 years ago. So there's definitely a lot that you can do here. So given that QuantConnect is this great tool, it's also free. I wanted to come here and play around with it and kind of show you all how to make an algorithm. So this is a standard template. Whenever someone comes into QuantConnect and they create a new project, they're faced with this template, okay? What we're going to do is we're going to take this template and modify it to be a basic inverse momentum strategy on the Forex market. And we're going to do this with the Euro US dollar pair, okay? So now that we've kind of addressed what it is we're going to be doing, why are we doing this? Well, we're doing this because when you're first learning how to use this platform, it's not as intuitive as you would imagine. Some of the documentation isn't as great as it could be. Doesn't mean you can't use it though. I mean, I found it very beneficial. So I think it's great if someone can just give you like a starting point and people can go from there. So first, we're going to come in here. We're going to adjust some of our parameters in our initialize class. So this is one thing that you might notice is like typically when you write a Python class, you're going to do def underscore underscore init underscore underscore right, and that's like how you initialize your class. You don't do that here. I haven't tried using like a standard Python initialization class. I've always just used this initialize here because I don't know if it's going to break or not. I don't know what they're doing on the back end, but this is how they have it set up, and so this is the notation I'm following. The other thing you need to know is that this on data, this is also important. So basically data is going to get fed into this class, right? And then basically every time you add data, depending on what the resolution is, here we see that in the standard template, the resolution is on minute. So whatever that resolution is on data, it's your algorithm is going to go through its logic, right? So in the standard template, we have all of this stuff for the SPY, we have for Apple, whatever. We're going to get rid of that. We're going to get rid of everything. We're going to get rid of all of this, and we're just going to start clean, and then we're going to start coding. Okay. So first, I want to do something to set my cash, right? So I need to set how much I'm going to be trading with. So we're going to come here and say set cash, and we're going to do 10,000. So this is going to be 10,000 units of the currency, which is probably going to be the US dollar. So we're setting the cash in our class. Now we're going to do self, and we're going to set the start date. Set start date. Okay, and these are going to be datetime objects. So Python datetime, you do year first, and then you do month, and then you do day. So we have 2022, January 1st. Okay, we're going to set the end date. Okay, we're going to go 2023. We're going to go August. I will go August 25th, right? Today's August 26th. So we're going to go for data that's, very, very recent. Okay. Now we're going to come in here. We're going to add what is the data that we're going to be using, right? Like which ticker we want. So we're just going to come down here. I'm leaving some space. We'll talk about that in a second. So we're just going to add Forex. And then what is the pair? So we're going to come up here actually. Self.fxp. I'm going to set what my Forex pair is. It's going to be the Euro US dollar. You don't use backslashes. Self.fxp Forex pair. Okay. I can't type today. Resolution. We want that to be minute. Okay, so this algorithm that we're having is going to be receiving data on a minute basis. And then what is the market? So the market determines where we're getting our data from. So if you're not familiar with the Forex market, one thing to note is that the Forex market is not like the stock market, right? It's not centralized, it's more over the counter. So in the stock market, whenever you place an order, your order goes to your broker sends it to the stock exchange, it gets listed on this kind of this open market where everyone can see it, everyone can see who's buying it. There's a lot of visibility into that traction, and there's a lot of standardization with prices because of that, right? So the stock market has very narrow spreads due to this. Typically, if you're trading a reputable ticker, right? Penny stocks are different. This is not the case in the Forex market. So in the Forex market, when you place an order to your broker, the first thing your broker has to do is decide, are they going to A book you or B book you, right? If your broker is going to A book you, that means they're going to take the transaction that you gave them and they're going to then basically ping a few other brokers. They're probably going to have a priority like rank list of which brokers they like to do business with. And they're going to say, hey, I have this transaction for this much. Who's going to give me the best spread? Basically, who's going to make the broker the most profit off of this transaction while also making the experience beneficial to the broker's client. Okay. So the broker is going to ping a few people, they're going to come back with a deal, and that all gets executed in microseconds, right? Or the broker is going to B-book you, which means they're going to keep that trade internal, and they're just going to bet against you. They're basically saying, hey, you know what? I don't think your trade's going to make money. We're going to take the opposite side of this trade. If you make, let's just say you make 20 pips and you're taking a micro lot on the US dollar, that's going to be $20. They're like, hey, if you make $20, we'll pay it out. But if you lose, we're going to take that $20 from you, right? And that's a common practice for Forex brokers to B-book traders who are not successful. So getting back into why we need that information, you have to specify where you're getting the market from, right? So each Forex broker kind of keeps track of the transactions and where the price is on their specific platform relative to the trades and transactions that they can see. And over time, you might notice that every now and then, different Forex brokers in their data feeds, they have slightly different tick values, okay? Or pip values, right? And this is why. So we have to define who is it that we're going to be sourcing our data from. And then also that's probably going to be the entity that we're trading with, right? So if I put, let's just say market.owanda, Owanda is a regulated Forex broker within the United States. It means I'm going to be trading with Owanda. And luckily for us, Owanda actually does have a partnership with QuantConnect where you can connect your demo account or live account directly to QuantConnect via an API and run these algorithms there. So it's a great data source to use for this. Anyways, so we're doing market Owanda. Now we need to set our brokerage model. And it's going to be the same thing. We just come in and we just basically specify the name of our brokerage. So this is, who we anticipate to be placing the trades for us. And I did Owanga, not Owanda. So you have Owanda brokerage. And then what I like to do is come in here and set some of my own personal ones, right? So real fast, we'll just separate this into three things. So these are kind of your capital/dates, right? Here you have your FX pair/market/broker, right? Now I like to come down here and set in custom strategy parameters. And it is worth noting that QuantConnect does support you to be able to add parameters here and then import them into your script, but we're not going to mess with that today. So we're just going to set them all as part of the class, okay? So for some parameters we're going to look at is we're just going to do a look back values. So this is just going to be array. Okay, so we're going to initialize an empty array. We're going to do look back at, and this is going to say, what do we care to look back at, right? So here I think it's not an array. We're going to look back at the high, right? So every candle has an open, a high, a low, a close. We're going to be looking at the high, and I'll explain what we're doing here in a second. And then we're also going to have a look back window. And this is going to be 10. And the 10 is in whatever resolution we have. So we're doing minutes, so this means 10 minutes. So that means we are going to be looking back at 10 minutes of data. And kind of what we're trying to do with this look back window, the look back values, the look back at, is we're going to be storing within our class object data for the last 10 minutes. And we're only going to store the data for the highs of the candlesticks. And then once we get to having 10 minutes worth of data, it's just going to delete the oldest entry, add a new entry, and it's just going to keep on going forward. And this is how our algorithm is going to have some insight into what's happened in the past to make decisions in the future. Okay. So now with this basic strategy, we're going to have a very simple rule, for lack of better words, for why we're closing a trade, and it's basically just there's a duration. So we're going to set a hold trade duration, and we're going to set that to 270 minutes. And then we're going to have a parameter for waiting, and we're just going to initialize that at self.holdTradeDuration. We're also going to have a parameter for trade open. So is a trade open right now? No, there is no trade open. And then what is the direction of the trade? We're just going to set it to true. Okay. So what are we doing with this strategy in these parameters? Well, what we want to do is we want to look back again at the last 10 minutes. And what I'm going to be trying to do here is we're going to look back at the last 10 minutes. We're going to say in the last 10 candlesticks, have they all gone in the same direction? One. And two, if they've all moved in the same direction, have they always been higher highs, right? Or lower highs is what we're looking at. And then if true, we're going to take a trade in the opposite direction and hold that trade for 4.5 hours. Okay. So basically, if in the last 10 minutes, we've looked back and we saw higher highs on the 10 last candles on the 1 minute chart, we're going to take an inverse trade and we're going to hold that for 4.5 hours. So that is a strategy that we are going to employ here. We're doing it again on the Euro US dollar currency pair. And one thing that I want to do as well, forgot to do this, we want to set our order size. So we'll just say order size. And we're going to set this at 10,000 as well. We're good to go. And now sometimes with this 10,000, it's worth noting like this can be finicky. I've had some back tests where like I put 10,000 in and 10,000 works as like a micro lot. I've had some back tests where I put 10,000 in and 10,000 is literally 10,000 lots. And that's one thing that I'm still trying to work out when I'm working with this platform. But in general, you do have some kind of order size that you want to use. I like standard position sizes, so it's like you're playing blackjack, right? You want to play the probability here since it's an algorithm, and you're just hoping that your algorithm is successful more often than it is not successful, right? So we've done all that. I don't want to get into on data yet. I'm actually going to come here and define a few more classes. So we're just going to define a class for is or not class, I'm sorry, functions. So we want to make a class for determining if we're seeing higher highs. So we're just going to call this assert positive. So this is going to be assert positive momentum, for lack of better words, right? So how do we say if we're seeing positive momentum or not? Well, first we're going to have an output. We're going to set it default to true, okay? And then we're going to loop through our look back values. So for I in range, self.look back vals, okay? If I is greater than 0, then what we're going to do is if our look back vals of I is less than the look back values of, and I hate the cap on the B right there, of I minus 1, then we're going to set the output to false. And then we're just going to return the output, okay? So what is this doing? We're basically saying by default, we think it's going to be true, that assert positive. It doesn't really matter. You can have it start false, you can have it start true, but with the way I wrote the for loops, we want it to start true. And then what we're saying is, this is not range. I need to fix my typo here. We're going to loop through the look back values. If it's the first value, we're just going to skip it, and we're going to go to the second value, right? So if value 2 is less than value 1, output's going to be false, okay? If value 3 is greater than value 2, output's going to be false, right? And ideally, you would probably have some kind of mechanism in here for if output equals false, you're just going to exit the function entirely. We're talking about 9 iterations. I don't think it's the biggest deal here since we're making a decision every minute and we're not making a decision every second. We're not going to worry about that. So basically, as long as output's false, it means that there's not positive momentum, right? Okay, well, likewise, we have this. We want the same thing for negative momentum. So assert negative self, right? You have to include your class object. Okay, so what do we do right there? We essentially did the exact same thing that we just did with the assert positive, only we're saying now if it's going up, so if this one's higher than this one, now it's false, right? Now, where is kind of the nuance here? If our highs are the same for 2 candlesticks, we're going to say that it still has that negative or positive momentum, and I think that's fine because generally we're saying the direction is staying the same the whole time. Okay. So now we can assert if it's positive or negative. One thing that we also want to add here is a delta. So we'll just do this here, self momentum delta. And I think we're going to set that at 15. So this will be 15 pips. So we have a function that says, is it positive? We have a function that says, is it negative, right? The momentum. We don't have a function yet that says, how much momentum is there, right? This stock could be flat for all we know. We need something that tells us that this currency pair could be flat. We need something that says it's not flat, okay? So we're going to do assert momentum, okay? And then we need to calculate a new delta, okay? And this delta is going to be basically the difference of the first price and the last price of our look back values, and then we want to convert that to pips. So I think right here we're just going to do length. -1 because the length is going to be 1 more than in the index, and then we need to convert this guy into pips, right? So generally, 1 penny is going to be, I think it's 100 pips. I'm thinking, yeah, I think this is going to be right. Pretty sure this is right. We'll try this. So this should be 15 pips. Okay, so we're saying, okay, the delta is the difference between the first and the last one inside that list, and we're saying if the absolute value between those two times 15 is greater than the delta we set up there. So now we need our if statement here. Greater than, right? Then we're going to return true, else we're going to return false. Okay, we just asserted, is there momentum, right? Is there enough movement on the chart for it to make sense for us to do an inverse here? Okay, looks good. Let's go back here and we need to do something to append the data to our look back values, right? So how are we going to be storing that? Let's just do append candle. And here it's going to be tricky because we need access to the data. So if you see on data, there's data here. So on data is going to be pushing this data into here, into this append candle. So we're just going to do data here as well. And then depending on what this look back at is going to determine if we're saving the high, medium, low, or close. And why this matters, right, is like in this first algorithm, we could have just said like look back high and not even worried about this. But what if I'm like back testing this? I'm like, oh, I want to see with high values, low values, open values, close values. I can easily come in here and kind of just modify it each time, run it 4 times, get that kind of sensitivity analysis, if you would, and see if there's a significant difference between which value you're looking back at in this strategy. So I want to have that logic in place so that I can easily do that later. So when I do this append candle, I need to support having various different values for the self look back at, for the look back at parameter. So oops, those are minus signs. High. And we're just going to go ahead and do this. Okay, and then we'll just change this to low. Open. Close. And this throwing fits in the build file, but that's fine. It'll fix itself later. And now here again, we want to append a value to the look back values based upon what portion of a candlestick we want to look at. So now this is an interesting part is, okay, how do I get the data, right? So I know I want to append it. What does it look like if I'm using QuantConnect to interact with the data on data? Well, it is going to be data, and then kind of like a pandas data frame, you're going to come in here and basically say like, hey, what is the kind of key that I want to interact with? So that's the key right there. It's the currency, and then we're going to say we want to look at the ask, and we want to look at the high of the ask, right? And again, we want to look at the ask because that is the price at which someone's willing to sell it for. If you're looking at the bid, that could be a strategy. But there's always going to be a spread between the bid and the ask. And I think, for me personally, I prefer to look at the ask over the bid, depending on if you're going up or down, right? I guess that does have implications, but we won't get into that right now. So for this, we're just going to look at the ask. Okay, so we're just copy pasting. And then we're going to come back and we're going to change it. And we're going to say here, we're going to say low. Open. Close. Okay. And that's all she wrote. That's all we need right there. So this is all great, right? We can say that the momentum is positive, say it's negative. We can define if there is enough momentum. We can collect our data. Is there anything else that we might want before we launch this strategy, right? Anything we can think of? Well, one thing we can do with QuantConnect is we can use their system for using limit orders and stop losses. Personally, I have found that I'm not a big fan of their stop losses. I don't fully understand how they're operating, but I found discrepancies between their stop losses and when I code my own stop losses, right? And even when I code my own stop losses and I compare how they perform inside of their platform to how they would perform against data that I have on my own personal computer, there are still some differences. So, I'm a little bit curious about this, but we're not going to dive too deep into what that is because this is still something I'm exploring myself. But for this purpose, I'm going to write some functions that will tell me if we're triggering a stop loss or even a take profit, right? So do we trigger a stop loss? Okay. We're going to come down here. And then if we're doing these things to trigger a stop loss or trigger a take profit, we maybe want to be able to define if we have done this, right? So if you think about it, the way this strategy is typically working is we're holding a trade for 270 seconds. Well, at some point in time, if we trigger the stop loss and we haven't enabled the algorithm to detect that the stop loss was triggered and we sold our position, it's just going to keep on counting down the trade duration, and then it's going to enter a new trade, or close this trade. I'm sorry, it's going to close this trade after the trade was already closed. So now it's essentially taking a new position, but it won't know it took that new position. So we want to make sure we do something that enables the algorithm to have that kind of insight. So we're going to make another function, and this is just going to just be assert if the stop is triggered. Okay. So now let's get into the meat of these things. So this is where we want to come back here and probably set a few more parameters, right? So we have this momentum delta, we have a whole trade duration. We should probably have a drawdown limit. And I think for this, we're going to set it to 60, and then we want a take profit. And we're going to set the take profit to 300, okay? And we're going to use the drawdown and the take profit here in triggering the stop loss and triggering the take profit. So now we're going to, kind of like when we did the delta, we have to calculate what is our current drawdown. And this is where we then interact with QuantConnect's class itself. So we're going to look at our portfolio. And actually, I should have, whenever I did euro US dollar, I should have just been using my myself.fxp. So we're going to replace these. Making boo-boos already. Okay, and we're going to look at our, whatever our currency is that we're trading. So we're going to look at our portfolio for that currency, and then we need to look at what is our holding value. And then we need to find the difference between our holdings value and our holdings cost, okay? So that's our drawdown. And then if our drawdown is greater than the drawdown limit that we set, we're going to return true. And this is essentially just, some decision is going to be made if this is true or not. We just want the logic to assert if this is the case here. And again, kind of what we're looking at here, right? I assume it's kind of self-explanatory, but basically there's a value of our holdings. If we do the value of our holdings minus the cost of our holdings, it should give us some kind of a differential. Actually, we might want to do the other way around. We will do holdings cost minus holdings value. This makes more sense. I messed that up. So essentially, if we paid more than what they're worth, that's what the drawdown is. And if the drawdown exceeds the drawdown, well, we're going to close the trade. Let's go and do the same thing here. And I spelled that wrong now that I'm looking at this. Oh, this actually isn't drawdown. This is going to be profit. And here we do want to have it be the opposite, right? So we want this to be the value. We're just going to copy the word cost. We want this to be the cost. So if the value exceeds the cost by too much, that's our profit. And then if it's too good of a profit, which we called take profit. close trade basically, and if not, don't close trade. Okay, so these two functions are done. Getting to this last one. So let's assert if the stop has been triggered or not. We do have this parameter up here for if the trade is open. So first, in asserting if a stop was triggered, we have to know, was there even a trade open? Okay. So let's do that. And then we're going to look at our transactions. I believe we will. Yeah, we're just going to do this. We're going to look at our transactions. We're going to get our open orders. And then if we do this, we're going to return true. Otherwise, return false. And then up here, we also need a else, return false. Okay. So what are we doing here? We're saying if we think the trade is open, right, because our waiting period is still counting down. So if we're still counting down from 270 minutes to 0 minutes, and our flag for trade open is still true, what we're going to do is we're going to look at the transactions that QuantConnect keeps track for us, see if we have any open trades, and if the length of those open trades is greater than or is equal to 0, right? Essentially, that means that we don't have a trade open, but our algorithm thinks we have a trade open, but in reality, we don't. And if we don't have a trade open, we're going to say, okay, true, the stop was triggered. Otherwise, return false, false, because we have more than 0 traders open, right? There's actually a trade open. So that's all done. Now let's connect it all. Let's put it all into on data and make it work. So first, on data, what we want to do is we want to save whatever data just came in. Actually, we probably want to, we want to do that first. We want that to be part of our decision. So self.append candle. Done. Okay, we just appended that to our look back vals. And now what this means for us is that whenever we're making a decision here, whatever was the most recent candle that just finished, we're making a decision including what just happened in that candle. If we waited to do this at the end of the function, we would be neglecting what just happened in the last minute. So we don't want to do that. So we're going to append the candle. Okay. Now what we want to do is we want to look and see if we have exceeded the 10 values in our look back window that we defined up here, the look back window of 10. And if we have, we want to basically go ahead and shuffle those around, removing the oldest, adding the newest. Actually, I want to say we want to do that first, actually. And we'll probably make this its own class, to be honest with you. It probably should be. Or I mean its own function. So let's just do that in def. And we're just going to say adjust window self. Okay. And then here, okay. Perfect. So what we're doing with this adjust window is we're getting the length of our look back values. If the length of our look back values is greater than or equal to the look back window. And ideally it should just be equal to, right? If it's 10, then we're going to clean it. Actually, we'll just do greater than. Oh, we'll keep it greater than equal to. Doesn't really matter. So if the length of lookback values is greater than the window that you're supposed to have, we're going to pop 0. 0 is basically going to be the first thing that's been entered. So the thing that's like 11 minutes old, right? Popping it just deletes it. We're going to get rid of it. So before we append the candle, we'll do this after we append the candle actually, the adjust the window, because that's what's going to put us at 11. Okay, and theoretically, like, this should always get triggered. Yeah, we want it to be greater than. We actually don't want it to be equal. Theoretically, this should always get triggered when there's 11 look back values and there's 10, right? It's going to reset it to 10 since this is getting called on minute. So we should be fine. We should be fine. I say theoretically. I mean, it really, that's what's going to happen. So we'll bump this up. There's too much white space. Now we have our look back values set. Now we need to see, do we have a trade open, right? Is there any kind of logic we need to take if a trade is open? Let's do that right now. And for anyone who's new to Python, if you do a Boolean operator and you put this colon here, it's going to say if this is true. That's essentially what it's saying. So self trade open, if it's true, do this. If it's not true, you're going to do something else. There's no reason to do this in Python. You don't need to do this, right? Doing this is the exact same thing as doing this. So calling that out, just in case someone's watching this and you're like, yo, what is that? And I think what we're going to do here kind of gets into our triggers of our stop losses, our take profits, right? Let's just see if we trigger one of them, right? So if our drawdown's too much, so let's just go and then what is going to cause us to close our trade? Well, we're going to have logic in our script that basically says if wait equals 0. So remember, we set wait to be the same as our initial hold trade duration, which is 4.5 hours. If this gets to be 0, then we're going to close the trade. And so rather than rewrite logic to close the trade, we're just going to say set it to 0. At some point in this function, it's going to close the trade for us. So we're just saying, hey, go ahead and do that. And likewise. So either one of these will trigger that. Will trigger the position to be closed. Okay. So now we're going to add the condition based upon the wait. So if there's still time before when we're supposed to close the trade, and it's greater than 0, we're just going to count down. Right? Another minute's passed by or another unit of time. We're just going to move on. But if wait is 0, then we're going to do something else. So now we're going to say, if wait is 0 and we have a trade open, we're supposed to close that trade. That's what we want. So now, how do we close the trade? Well, it depends. Are we long or are we short, right? So remember up here, we said this long is true. At some point when we open the trade, we're going to set it to be long or short. And when we close it, we have to take a trade in the opposite direction, right? So if the trade is long, we're going to do one thing. And then if it's not, we're going to do another thing, right? And we'll just do I think a market order is what we want to do. So we're not doing anything special here. So this is going to be part of the QuantConnect. So we're just going to do self.market order. You have to feed it the ticker that you want to trade or the currency pair. So again, we're just going to do FXP. And then we're going to do the unit size. So this is going to be negative. And then since we're closing a long position, we are selling, and we're going to be selling our order size, right? So that 10,000. So, and this actually should not be in parentheses. Now I'm thinking about it. This is these two should have just been like that. That was a boo-boo on my side. Anyways, because those are not properties of the QC algorithm that we're inheriting. So we have our order size, we have our FX pair. Okay, and this needs to be touching. So we're going to do, an inverse position of the order size. So if we were long 10,000 units, now we're going to sell those 10,000 units. Else means if we were short, order size. Okay, and this means we were short, so we had sold those currency units, and we're going to buy them back. Okay, so if the trade is open, we're going to do this, and then we're going to say, okay, okay, now the system knows that the trade has been closed, right? Now, what else could happen? Well, if weight is not greater than 0, okay, and there is not a trade open, then what we're doing is we're looking to go, okay, is it a good time to open a trade? So the else here is opening a trade. And for us to determine if we want to open a trade, we need to determine, is there positive momentum or is there negative momentum? So first we're just going to do momentum. Okay. We're going to call this go long. Go short. Okay. And now we're going to make decisions based upon these three booleans, right? So if there is momentum, what are we going to do? Well, we need to see if the momentum is just a change in values, right? You can technically have enough of a delta to satisfy your momentum without it being all positive or all negative. So we're saying if there's enough change in values, enough variance, basically, variation, whatever you want to call it, then we're going to say, okay, if go long, okay, elif, so else if go short, okay. So if there's momentum, is it in the positive direction, right? And maybe we shouldn't say assert momentum, we should just assert price change. We're just gonna leave it momentum for right now though. So now we're going to first place a trade, and it's kind of just gonna be this right here, right? So if go long, we're gonna make this market order. We have a trade that's open. The trade is long, and then we need to set our weights. And remember, the way that we set weight up here is we set it to just be this whole duration. So we're just gonna literally reset it to be that initial value. Okay. Now, if it's go short, it's going to be very similar to this, but this is going to be negative, and this is going to be false. Okay. And more or less, this is it, right? This is kind of what we're doing. So look this over real fast, make sure it all makes sense, and then I think we're just going to hit back test, and we're going to run it. Let's go ahead and do that. So if we want to back test, we just come up here. There's this kind of play button. You just click it. Okay. Since we are on the free version of QuantConnect, we do have to wait 20 seconds before it will deploy our strategy. Okay, here we go. We realized we have an issue, and it's because we didn't feed data into a pinned candle, right? So a pinned candle is supposed to take a positional argument. It did not, because a pinned candle is supposed to take data. So let's just go ahead and do that. And if you look, it's the only one that takes it. Okay, that's fine. We'll click run again. Now, one thing that kind of matters is if we come back and we look at this, we have 99 back tests remaining. So in QuantConnect, you can create a project. In that project, you by default will have 100 back tests you can use. And then, if you run a back test and there's a bug or a runtime error or anything like that, it's going to count as one of your back tests. But you can always create a new project and get 100 more back tests again. So really not a big deal. So now let's see how the strategy performs. Oh, we have another issue. Maybe. Yeah, it should be range length right here. So I'm full of bugs today. On line 30, I don't want this. Let's go to main. That's a good catch. And I'm trying to see if there's anything else. I hate to do this again. Okay, I think it's fine. We don't need that. Let's try this one last time. And QuantConnect does this thing, will like assign this random ass name to your back test, and that's just something they do. So here we go. So we're starting to see the performance here. Oh, there we go. I spelled mark your order wrong. So it started running, and then we found there was this issue. So if you're sitting at home and you're seeing this, you're probably like, what the fuck, bro? You got so many typos, man. Okay, so we have the results. The results are in. So we can see that this basic momentum inverse strategy, and actually I think I messed it up. We technically did a non-inverse, right? Because whenever I said, um, we should have said go short when we assert positive. So this is actually technically a momentum strategy. So we did the inverse of what I said we were going to do, but we'll fix that in just a second. So doing a momentum strategy where we say if I look at the last 10 candles and there's higher highs every time, and there's at least like a 15 pip change, and I take a trade and I hold that trade for 4.5 hours, basically what's going to happen is I'm going to lose money over the long period of time. It's not a profitable trading strategy, right? And like if you look here, um, it's kind of a small trade, right? But you take all these losses, and you take them over time. So this algorithm is not executing every day, right? It's not saying these opportunities every day. But you take a few trades, you lose a few trades, but when you look back to the year, you look at all the time, you lost money, right? You're down 10.35%, which honestly, that's not a lot. Like, if your algo only does positive 10% over the span of a year, you should have just invested in SPY. Like in most cases, that's probably going to be true. They give us this probabilistic Sharpe ratio. Basically says it has zero confidence in our strategy. We can come down here and look at the back test, right? So we have this probabilistic Sharpe ratio again. The Sharpe ratio is saying that, like, hey, look, your return is not good. It tells us how many trades we took. So we took 530 trades. We won, shit. Oh no, that's the average win. Like how much we're winning on a trade, how much we're losing. So like it's kind of a one-to-one risk to reward, right? Win rate was 44%, loss rate was 56%, right? So essentially, if we're talking about a one-to-one risk to reward ratio, if we can just flip this win rate and this loss rate, like this should be a profitable strategy, right? And then the last thing is the estimated strategy capacity. So they kind of try to estimate like, hey, if you wanted to maximize the amount of money that you can put into this, obviously there's some threshold at which you can no longer scale a strategy, right? So they try to estimate that for us. So some of the things here are pretty interesting. We're going to go back up though to our main, and we're just going to say, you know what? We meant to do an inverse, so this should actually go short, right? Because we're saying that there's positive momentum, and this should be go long because we're saying that there is negative momentum. So if we assert that there is positive momentum, we're shorting, and if we assert that there's negative momentum, we're going long. That is kind of the basis of a inverse momentum play, right? So we're going to run this again, compare results, and it's actually a good thing that I messed up and did not catch that, because we want to be able to compare like what happens if I keep on trading with the momentum versus what happens if I trade against the momentum, right? Which one's better in the long run? And this strategy doesn't use any kind of fancy, liquidity pools, doesn't use any kind of ICT concepts, which are things you can Google. They're pretty interesting. No fundamentals. We don't consider news. Nothing. Just purely momentum, right? Something that's kind of timeless. And here we go. We did the inverse now. And now here we see in this strategy, we actually only got a 2.4% return. We're not getting a crazy return here. We're also not really taking like huge trades, by the way, in this strategy, but we're not getting a crazy return here either. But we are taking small trades. But what we have seen though is that this is more or less a profitable strategy. And we can see that when we come down here, it's not like an amazing profitable strategy because the Sharpe ratio indicates, that we're not very profitable. The probabilistic Sharpe ratio says that, like, we don't have a lot of confidence in this number anyways. Like, it could be a lot lower. But if you look at the risk to reward, this 29%, or not percent, like the 0.29%, right? Like it's very, very small. We're doing pretty good. That's kind of like a 9 to 8 risk to reward, or a 10 to 9. Not trash, but we are losing more trades than we're winning. So it's kind of interesting. You come here, you look at it, and you go, okay, win rate's 44%. We come here, win rate's 49%. We're really not winning more than we're losing. We took 528 trades. But we are doing is we are slightly more profitable, not that the Sharpe ratio, on these trades. So it's kind of interesting. But yeah, so here's the basics of what you need to create a algorithm that you can backtest here, right? I think what's important here is understanding how do I interact with QuantConnect, right? How do I make my initial class? Maybe how do I come in here and write functions, or my initial function, my initialized function? How do I create these additional functions that I then leverage in on data? And essentially, like, how do I go about creating a very basic trading plan? Because once you do that the first time, it's really easy to go, okay, I have this more complex strategy that maybe I've implemented, or maybe I've seen, or maybe I have this idea. And once you know how to make the back test work, it's really easy to go back and make those changes. So thank you so much for watching this. I hope you enjoyed it. I hope you learned something from it. And if you felt like this was beneficial, definitely drop a like, or comment if there's something that you think that I should show about QuantConnect. This is something that I'm currently working with in my personal time, and I'm very interested in the platform that they have. So thank you.